Hello and welcome to our viewers on Crux Investor and also to our listeners on Cruxcast, our podcast series. We're going to be speaking with Steve Parsons. He's the MD of Bellevue Gold, the Australian gold explorer. Good morning, Steve. How are you?
Yeah, I'm good, thanks. Yeah, thanks very much.
Yeah, good to have you, and thanks for making the time. I'm going to get you to, in your own words, give us a 2-minute summary of Bellevue Gold.
Yeah, look, Bellevue Gold, we're a fairly new company. We've only been around for a couple of years now. We're an exploration company. We're based in Western Australia in the Goldfields region, so a very prolific gold, discovery area. Lots of gold mines in the area, and we're exploring the old Bellevue gold mine. And the old mine itself produced nearly 1 million ounces of gold at a fairly high grade of 15 grams per tonne, and they mined it from 1986 through to 1997. It's a very, very profitable mine. However, mining stopped back then, and then it was owned by nickel companies since then. And so here we are now, drilling our first holes into it over the last year and a half, and have got a very good discovery. And the latest resource is, 1.5 million ounces of gold, and it's soon to grow even bigger than that.
Okay, well, there we go. Thanks for that summary. And before we get into the questions proper, can you give us a bit of your background? You're geo?
Yeah, so look, my background is geology, exploration geology. I studied at Canterbury University in New Zealand and came across to Australia after that, and worked for a number of mining companies and gold companies, and then been involved in exploration pretty much my whole time over here.
And have you seen anything like this before? Have you worked on anything like this?
Oh, this is a pretty amazing deposit. I have worked on a couple of amazing deposits in the past, though. But for the grade, this is a real standout, and I certainly haven't seen anything like this before.
Right. Okay. You've had a great year. Share price has trebled. You've got, as you say, 1.5 million ounce resource. You continue to drill very high grade. It's all good, isn't it? Pretty easy work.
But I was only easy like that. It all rolls off the tongue very easily, doesn't it, when you say it like that? Look, the thing was, the project was an outstanding project in its day, and that was one of the reasons why, me and the exploration team, decided to jump on board on this project. And, it's certainly been unloved for 20 years, and we saw the opportunity in the fact that, there was always this thought that the mineralisation could continue, but no one ever knew where, and, we put geological thought into it. And, if you're having success and things are going well, you obviously have the opportunity to raise further funds, and because the grade and the rate of growth has been so rapid, we've certainly had, good success in, capturing that sort of market and being able to raise funds. And those funds raised, the dollars all go back into the ground, and, we're discovering gold for about $15 Aussie an ounce, which is incredible in itself. So, 5 drill rigs on site, and, the more rigs you have, the more chance, adding further ounces. So, we sort of back ourselves to continue finding gold.
Right. So again, before we get onto the strategy here, so your shareholders have got to be pleased. Well, first of all, that the type of shareholder over the last year has changed. You've got a lot more institutional on board. And where are they? Are they mainly Aussie, or from further afield?
The shareholder base has changed a lot over the last 12 to 18 months. We're very much a retail company, what you'd call a shell company down in Australia, with all mum and dad retail investors. And over the last, probably 12 months, we've grown to become much more institutional. We'd probably be about 40% institutional now, and that institutional register is probably made up by about 50% from Northern Hemisphere and 50% in Australia.
Right. Okay. And what are they getting involved? Clearly the results have been great. So you're probably not getting much pushback from them, but what are the conversations that you're having with the institutional shareholders, with your monthly or quarterly calls?
Yeah, look, and it's not just institutions that we speak to. Regularly be standing on stage and speaking to retail shareholders as well, and we've got a number of outlets and trying to get news out to those retail shareholders, and of course analysts as well. which we update. And look, everyone seems to be very happy with the way things are going. I mean, over the moon. I mean, the share price has been, reflecting how well we've been going on discovery. And I think people are, looking for us to continue on the aggressive step out drilling that we've been doing. It certainly looks like the ore bodies are still open, north, south, west, and east, and at depth. So, why wouldn't we continue to step out? I think there's definitely the thought there that people want us to add more rigs if we can, and we've certainly added rigs as we've gone and had more confidence in the resources, and so we're up to four drill rigs now on site, and in fact we'll probably be more than that, I'd say, very, very soon as well. And then we're sort of weighing that sort of step out discovery drilling, weighing that up with versus should we be doing a little bit of infill drilling as well and increasing the confidence level of the resource. And of course that's something we'll be doing as well this year.
Right. Okay, so I mean, you said earlier you'd not seen anything like this before in your work experience. So how much of this is down to luck? How much of it is down to planning? How much of it is down to delivery through a rigorous process? I mean, if you look at what you acquired, was it Drake? Was that the former company?
Yeah, that's right.
So Bellevue Assays now. So did you know what you were getting into? How much data did you have? How much confidence did you have that there was this much gold down there?
Yeah, well, I mean, we after the last company that we were running, which was in West Africa, we made, and that was taken over by a North American company, which they're looking to produce gold at the moment on. We very much, me and the team, made a conscious decision to look down in Australia and to look for a brownfields project and to look for a higher grade brownfields project. And this was a real standout for us, and the fact that, as I said before, it had been previously owned by nickel companies. The last company to own it was Xstrata, and they exited out of Australia. So the project became available. And for us, when you want to find, I mean, it's the classic. If you want to find an ore body, I guess you can look either grassroots and spend time looking at a brand new area. And we've had success with that in the past. That's a good way of finding gold, but it takes a lot longer. And the other way is to look for a brownfields type project. And for us, this was a real standout because it had historically produced a lot of gold at a very, very high grade. So there was a lot of data there in the past. It was all known down the mines department. The previous companies had made a lot of money on it in the past. However, geologically, there was a fault that had come through, and everyone had said that there was nothing on the other side of this fault. So, that for us, that was a real standout because geologically we thought, well, that was a 20-year-old, geological interpretation. And hey, just because somebody says there's something not on the other side of something doesn't mean it might not be there. So we spent a fair bit of time and effort for those first 6 or 8 months before we drilled the drill hole to understand what we thought the mineralisation.
But what about that decision, before you made the acquisition? I mean, what made you go for it? I mean, you can't just go, oh, let's give it a go, it'll be fine. You must have had some intelligence behind that. I mean, what was the thinking?
No, I mean, you sort of weigh these things up, I guess in a sort of risk reward basis, and you could look at it as a sort of a percentage of success of what the chances of success are. And as I was saying before, grassroots exploration, it normally takes a very long time, and then of course grassroots exploration in certain countries and jurisdictions is a lot more difficult than others. So if you want to find something in the middle of nowhere, grassroots, you probably got realistically a 5-10% chance of something happening over a very long period of time. And for us, literally all our view was that it had produced a lot of gold. It hadn't been looked at for 20 years, which was just incredible in itself. It was a very, very highly profitable mine. And so the chances of finding something we viewed as sort of, 70 or 80% chance, even though geologically, everyone said there's nothing, you'll never find anything geologically there again.
Right.
But brownfields exploration would be prepared to back ourselves, and so we saw the chances of being much higher than they going grassroots.
Right. So you've thought, okay, it's produced at quite a high grade before, let's say 800 nearly a million ounces produced, but has sat around for 20 years and done nothing. So were you a field of one looking at this? Was the geological fault putting everyone off, or was there a bidding process? I mean, how hard did you have to try to get this?
So the project had actually been bought by Drag Resources, and Drag didn't have a technical team at the time. They didn't really know what they had. They knew they obviously had something good, but I think their view of it at the time was very much, oh well, it's a property, it's an asset. How are we going to move ahead on it? And the thinking back then was, from the previous people that were running it, was, well, maybe there's some gold in the old tailings dam, or maybe there's some nickel nearby, or maybe there's, well, who knows what else. But the view was very much, because this fault had come through, you will never find anything on the other side of the fault, and that has always been the thinking by everyone who's ever looked at this project in the past.
Right. So how much did you guys pay for it?
I'd have to go back and have a look. It's on the ASX platform, but I think it was about $1 million and
right.
some shares and bits and pieces as well. Yeah.
Okay.
We own the project 100% now. Sorry, it's not on the top of my head.
No, it's fine. It's absolutely fine. So, right. So you've got this project. You spent the first 6 months trying to work out what you had, yeah, and at that period, were you thinking this could be something significant, or were you just hoping for a good project, something which might stroke the interest of investors enough to get some more funding to work this out? I mean, what were you thinking it was?
Well, our view was very much, exploration is what we're about, and we're looking for, world-class deposits, somewhere around the world, and this is in Australia, obviously, but the view very much was, let's look on the other side of the fault, let's get this right, let's look around it and see if we can find another, 1, 2, 3, 5 million ounces of high-grade gold. That was without a doubt in the back of our minds. However, we also had the view that, worst case scenario, we should be able to cobble together, a few thousand ounces here, there and everywhere, and hopefully maybe turn it into, a small West Australian high-grade gold mine, somewhere in the lines of, 100 or 200 or 300,000 ounces of gold. And hey, it's a start, and then from there leverage up and look at something else.
Right.
But, we did right from the very start back ourselves in the fact, where can we find the next big discovery below or adjacent to the old mine?
Right. So, I think it's a well-told story in the market. I think you're well on your way to creating something significant. But I just want to talk about something for investors, new investors thinking of coming in, okay? Because there's still a kind of reasonable, retail component to this. And the question is, how do you, maybe you and your team, get that balance between driving the business and appeasing shareholders in terms of shareholder value, value creation? And you obviously done that in the last year, but it's going to get more and more difficult to do that. So what's the process internally for looking at those things?
It's for us, it's very simple. All we're trying to do is create value at a project level, and if we create value at the project level, then that should, in theory, come back to create value for shareholders and the share price appreciation. And creating value, at the project level is, it's adding further ounces and more discovery ounces. It's converting into higher category as well, so more valuable ounces. It's drilling deeper, adding, seeing where those resources continue on to. That's the sort of thing we try and do, and we try and do it very efficiently by for less than $15 an ounce.
Right. Okay. So the strategy is drill, drill, drill.
Yeah, without
right.
a doubt. 100%.
Okay. Keep it nice and simple.
Going back to when we very first started, we literally only had a few $100,000 in the bank, and so the first drill program was very much where we're going to go. We've got a little limited amount of money, best bang for our buck. We want to make sure that we're hitting our highest priority targets as quickly as possible, improving our theories right. And we did that with the one drill rig and made it work. And we ramped that up to 2 drill rigs in early 2018, and then we got to 4 drill rigs towards the end of 2018, and here we are now with 5. So we're certainly very happy to keep on adding drill rigs if if the
Right.
deposits keeps on growing.
So I guess that sounds to my question of earlier. So how much of this was luck and how much of it was planning?
You'll have to ask the exploration team.
I think they would say it was all planning. Well, they should, shouldn't they?
Look, without a doubt. I mean, look, there's always a bit of luck on these things, but you have to, you've got to have a good team that comes up with the right strategy on where to drill, and then it's got to have the good backing from the board to say, hey, we back these guys. Let's give it a go, and
Well, as long as the grades and the ounces keep coming, they're going to continue to back you because something's going right, obviously, right? So to that point, let's assume the next 18, 24 months continues the same way. You've got a big resource number, at the end of that. What's your end game here? What's your business model? There's got to be a point where you kind of go, okay, I think we're good now. Let's talk to people about either making acquisitions or being acquired, or do you get into production? What are you thinking?
Yeah, look, I mean, it's you try and obviously you're in control of your own destiny with things that you can control, obviously. And for us right now, that control for us is really about the drill rigs and the geological understanding and adding ounces. So we're very much about just keep on adding ounces for the time being, and then converting those ounces into high confidence ounces. Creating value on the project level. And at some point in the near future, it'll be a point where we go, right, this is going to be a mine. It's going to be a highly profitable mine. This is what it looks like. Can we get back into, so that's sort of the game plan.
Okay, so
right now it's very much about just adding ounces, right?
Right. So you're not setting any targets for yourselves yet. It's early days. You're, I should say, less than 2 years into this. Things have gone quite well, and you want to sort of continue repeating that.
Yeah, and I just, one of the problems I think with a lot of junior companies like ourselves is we try and put ourselves in boxes too early on. And sure, great, get up and running as a mine without a doubt. Fantastic. However, that is not our strategy. Our strategy at the moment is very much the resource is still open in every direction, north, south, west, east, and at depth. Yeah. So, we've got the backing to keep on drilling. So we might as well keep doing that, keep on adding ounces, and then we can get to a point where we realise, well, what's the scale of this going to be? And it's just too early to do that right now. So.
Right. Okay. Okay. I accept that. That's fair enough. So, if I may, because I want to, this is for investors, retail, high net worth, family office investors, to understand. So, we haven't talked about the project because I think there's a lot of information out there about that. But if you could maybe give us a sort of quick summary of the 5 key points as to why investors should come into Bellevue Gold now, and perhaps talk about where you think the gold market's going as well. So if you can cover all of that off for me.
Yeah, look, I guess the real key things. I mean, we are a very simple, investment proposition. We try not to overcomplicate things at the moment. So Bellevue Gold is very much about adding ounces. It's adding very high grade ounces. I mean, it's globally one of the highest grade ore bodies and discoveries that's happening up there at the moment. We're growing ounces very rapidly. I mean, 18 months ago we were 0 ounces, and here we are at 1.5 million ounces. We are cashed up. We continue to have good financial backing, so we're not scared to go and drill those holes. And at the moment, those holes that we keep on stepping out on are continually adding ounces. So that's us in a nutshell. It's efficient, it's high grade ounces, and we keep on stepping out on that. And look, for me personally, West Australia is without a doubt one of the premier jurisdictions in the world to be in. We're in the Goldfields region of Western Australia. There's mines all around us. We've got granted mining 10 years, so to get it up and running, it's going to be very straightforward. And look, the gold price is looking fantastic, and especially in Aussie dollar terms, it's looking incredible. So, all those things are lining up for us, and, we're certainly set for the rest of this year and next year, we think, to be a very, very good, growth on the resource base, and hopefully for shareholder appreciation as well.
Thank you for that. I mean, yeah, I forgot, obviously with the gold in Aussie dollar terms is at one of the highest it's been for a long time, if not ever. So, and you pay for everything in Aussie dollars, so for you it's good. So the US dollar has no bearing on your
Well, at the
market
moment,
cap?
the trend in the Aussie dollar versus US dollar has been negative. So Aussie dollar's going down, US dollar going up, which means that US dollar gold price going up is a very good thing for us in Australia.
Right.
So we're pretty much at all-time highs in the Australian dollar gold context at the moment.
Okay. Well, look, Steve, thanks very much for that summary. It's a nice introduction to your company. We'd love the chance to kind of catch up and maybe get into the weeds of it, at a later date. So again, thank you for your time. I know you've had a long day. You're ready to go home, I imagine.
All good. Yeah, thanks very much for your time.
Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.